Good morning, everyone, and welcome to Hein & Associates webinar, Preparing Your Business for the Next Phase of Growth and/or Transition. I'm Jennifer Nichols, your moderator and webinar organizer today. Before we start, let's take a moment to cover a few housekeeping items. All audio lines are muted, so please use your chat feature to ask any questions. We will save time at the end for questions and answers. This event is being recorded, and a link to the recording will be sent out to all registrants later today. Your active participation is important throughout the session. In order to receive CPE credit for this session, you will need to be connected for a minimum of 50 minutes and must answer 75% of the polling questions included throughout the presentation. Immediately following this webinar, you will be directed to a survey page where you can leave comments. Please check your inbox later today for a follow-up email that contains an evaluation form that must be submitted in order to receive your CPE certificate for the course, a link to the webinar recording, and presentation materials. Our presenter today is Derek Groff, a Director of Valuation Services in Hein's Specialty Services Group. He specializes in assisting companies with valuation services for tax compliance, financial reporting, mergers and acquisitions, corporate finance, strategic planning, venture investments, family law, and litigation support. Derek works with clients in a wide array of industries, including manufacturing and distribution, oil and gas, alcohol, life sciences, and technology. Thank you for attending today, and I would now like to introduce Derek Groff.
Thank you, Jen. Hello, everyone. Thanks for joining us today. Before we dive into the topic du jour, I thought I'd just give you a quick overview of sort of my background and myself in addition to what Jen just mentioned. So as she highlighted, I work in the Specialty Services Group here at Hein in Denver. I'm the leader of our valuation and transaction advisory practice. I'm somewhat new to Hein. I've been here for about 3 months and formerly worked at a comparable public accounting firm actually in the Bay Area in California. And so, some of my educational background, I went to school at Berkeley and in Santa Cruz. Both of those are in California. And spent some time prior to that, actually after that, in investment banking and corporate development, where I really mainly focused on M&A transactions and venture investments. And then the past 8 or 9 years or so been in what we call fundamental business valuation, which is what I primarily focus on here at Hein. So before we get to some of the content, there's a polling question here that should be available to you. And take a few minutes to take a look and fill it out.
What is your current position at your company? Owner, CEO, CFO, Controller, VP of Finance, COO, Consultant, or other?
Okay. Great. Well, thanks for doing that. Looks like there's quite a few people in a variety of different roles and a lot of consultants similar to myself out there. So that's good to hear. So as we kind of dive in here, feel free to ask any questions via the chat function on your screen. So as we kind of sit here and think and talk about growth or transition planning, it really varies depending on your business and where you're at and sort of the life cycle of your business. You'll see sort of throughout the presentation that I've used a brewery as our example company, but a lot of this really applies to any business that's trying to think about what the future holds. So in terms of a brewery or a company's current situation, as you start to think through and potentially plan, I think it's helpful to kind of understand where you're at and sort of do a status check. Is the business growing? And if so, how fast? Is it sort of stagnant, where revenue or profits sort of flat year over year? how profitable is the company, if at all, or is it, in an unfortunate distress situation? And depending on the answer to some of those questions really kind of dictates, what that goal or plan may be and what sort of transpires, over the next either several months or several years. Yeah, as you think through the future, as we kind of do in our own lives, personal and professional, it's important to have goals or some kind of plan in place. And, I use sort of buy, sell, hold. I think, you're thinking of buy as a company, are you looking to acquire other assets or other companies? Are you looking to potentially sell your business or sell parts of your business, or just kind of continue status quo and operate as you are, likely as a privately held business? And again, it's important to kind of consider and think about whether you have a plan to kind of achieve those goals that are in place. I use this little picture here as graphic, if you can see him. I'm sort of a big fan of the show The Prophet on CNBC, and this guy Marcus Lemonis that basically goes in and tries to fix struggling companies and turn around mainly owner-operated businesses, much of which are sort of similar, right, to breweries. Not necessarily that they're struggling, but they're typically owned by the operator or the brewmaster. So he basically just says if you're not evolving, you're dying. It's sort of like if you're not moving forward, you're moving backwards.
Okay, so our next polling question: does your company use a business plan or financial forecast to operate the business? Yes or no?
Okay, great. Looks like the majority of you have a forecast or a plan in place, which is great. That's wonderful to hear and great to see. And I would strongly recommend and advocate that everyone starts to consider that or put something like that in place. Unfortunately, I do come across several breweries in particular as well. Actually several sort of smaller owner-operated type businesses that don't have that in place, and it can get ugly at times if you don't have something to kind of go back to, or at least something to try to execute against and track your progress and targets. So in terms of what's next, sort of regardless of what phase you're in, I think it's important to kind of have a timeline. If you're trying to grow or if you're considering transitioning your business in some fashion, is that something that has to be done immediately? And if so, that certainly changes things quite a bit, because everything is a bit frantic and hectic, as opposed to trying to take a more sort of measured approach to the future of your business. And we typically recommend if there's some kind of, say, transition, that's the goal, whether it's sort of a succession or ownership transition, to try to at least start planning 18 to 24 months out, if not a little bit sooner than that. Having a plan in place so that you kind of can track again, what your goals are, what needs to be done, and sort of assign sort of roles and responsibilities and deadlines for certain things like that will help. And then it's assembling a team. This is important, I think, both internally and externally. Is not trying to, if you're the owner or one of the management team, trying to do everything on your own. You want to assemble the right people internally, whether it's again in the management team, key owners, CFO, sales guys, things like that, as well as trying to hire the right external team, and that's not always necessary, but often very helpful and critical in trying to succeed in that next phase, whether it be growth or potentially transitioning the business. And so that's going to include attorneys and accountants and bankers and some consultants, as sort of appropriate to help you meet your objectives and get to where you want to be. And then another important thing to kind of consider and keep in mind is to try to get your housekeeping in order. Again, whether you're trying to grow or sort of transition your business. And obviously, as sort of consultants and accountants here working for an accounting firm, we're focused on the numbers. So making sure your financials make sense or in order, and things add up correctly, and everything ties out. I mean, ideally, we'd like to see audited financials, but that's sometimes not the most appropriate or applicable opportunity or situation, depending on the business and sort of the liquidity there. But at a minimum, just making sure that things are what they are and make sense, I guess. And then again, making sure you have the right management team and key employees in place to meet your goals and your objectives. If you need to kind of fill out, certain roles, then it's important to start looking for those sooner rather than later, as opposed to trying to, sell a business, for instance, without a CFO in place. That would get pretty difficult and challenging during the due diligence process, for example. And then in terms of some of your systems and controls, and just making sure that you're able to track things internally and plan appropriately, whether it's a CRM system or ERP system or something along those lines. That's helpful when someone's trying to either grow their business and be able to track what products or SKUs or beers, for example, are profitable, and where you're supposed to, or where you should potentially try to scale and grow certain products in certain markets. And then obviously, if you're trying to sell the business, it'll be helpful to extract information and reports based on whoever may be buying and or investing in the business. One thing to kind of consider, and one is we have a proprietary product in place that's designed for the beer industry, called Farrell ERP. Hopefully you can see this here. We were just out actually in Philadelphia at the Craft Brewers Conference last week, talking to a lot of different breweries about this, and sort of hearing some of the struggles and challenges and pains of trying to grow a business and be able to specifically track costs, track products and SKUs and batches and things like that. And not to make this a sale or anything like that, but this is a pretty dynamic product that is gaining a lot of traction in the marketplace. It's sort of a one-stop shop, a complete solution, if you will, in terms of trying to manage and run your beer business. And really, it's based on a NetSuite platform, so it's cloud-based. It's pretty dynamic and flexible depending on what you want to do, with your brewery. But in particular, it helps you, manage inventory, be efficient with your production, be able to track costs and maximize yield, and basically, make sure you understand your margins and workflow and optimize things in the best way you can. Okay. So in terms of succession planning, I'm going to use sort of succession planning interchangeable with transition planning. But really, it's just trying to identify and develop, in this sense, successors for key positions in an organization, as well as what that next phase may be and what the next plan may be. So, the primary goal of succession planning is really to transfer ownership of a brewery to some kind of different party, and that could be management team, could be the next generation of a family if it's a family-run business, it could be employees, and it could be obviously an outside party in terms of some kind of buyer or investor. And really, again, not to sound redundant, but making sure that you spend the time to prepare is important. I noted on here, failing to prepare is the same as preparing for failure, and it's really key. It is really just trying to get ahead of things before you're in a situation where you have to transition a business or have to sell the business, you're not going to get, the price or the multiple that you're looking for there. And, as we kind of see day to day in our business, and I'm sure a lot of people are aware, there's a lot of, M&A transactions and sort of ownership, transitions that don't succeed. I put 50%, depending on who you talk to, you see that number get as high as 70-75%, and that's really due to a lack of preparation and planning and execution. And then in terms of succession planning in particular, as it relates to a family-owned type business, we all have families, so I'm sure everybody's aware that there's some drama that goes along with being a part of a family, and that actually gets heightened and highlighted and elevated quite a bit when you're working together and transitioning a business from sort of the founding generation to the next generation. So you see that number drop to 30%. And I think if from the second generation to the third, I think is something along the lines of 10 to 15% of businesses that actually succeed when transitioning them.
Hey, our next polling question: does your company have a succession or transition plan in place? Yes or no?
Okay. As you can see, it looks like there's a fair amount of you that don't. Maybe that's because you're on sort of the consulting side of things, and obviously that would make sense. Hopefully, if you're working with companies, breweries, and owner-operated, family-owned businesses, you're sort of advocating the relevance and benefit of having some kind of plan in place. And if you're working internally, obviously you need to kind of consider that. Obviously that's going to help as you work through the next stage of your business. So I put here just a kind of a framework in terms of thinking through transition planning or succession planning. Again, you're trying to start with what's the organization or the brewery's vision. What do you want to be? Where do you want to go? And then try to develop some strategies or goals and objectives to try to get there and meet that vision. And then it becomes about sort of executing, right, in terms of identifying who the key management team, executives, or employees are that can help you meet your goals and objectives, and then trying to evaluate not only the business but those employees and develop sort of a process in place to track your goals and your targets and sort of make sure that you can not only execute against your plan, but implement it and continue to track it as you evolve. Yeah, in terms of succession planning or transition planning, depending on the business, on the lower right-hand side, there's sort of a box that highlighted of what that may entail. This box really more pertains to, I would say, in an owner-operated family-type business. Could be a brewery, but, particular, regardless, the business planning, management planning, and transition planning would apply to any business. And if we're talking to the owners or proprietors of a brewery or any kind of operation, some of that financial planning and estate planning is important as well.
Our next polling question: what is the ideal outcome for your company in the next 3 to 5 years? IPO, sale, ESOP, or stay privately, no change.
Okay. Looks like a majority of you are either looking to sell your business or stay private. I was hoping to find somebody that was going to take their company public. It's sort of fewer and far between these days, but it makes a lot of sense given some of the owners' requirements and costs associated with that. But even further to the topic and my points here, planning for a sale, or if you're staying private and really you're just trying to keep it, quote unquote, in-house or in the family or employee owned. Trying to plan for growth is critical, and all that stuff here would be appropriate in that sense as well. So some of the ownership type transition options are listed here, and there's I think a lot of people as well as management team and executives maybe aren't aware of all the various opportunities and alternatives at their disposal. Whether it's a sale to a buyer, whether it's a strategic buyer or a financial buyer like a venture capitalist or private equity firm or some sort of investment management company, or a partial sale where you're selling a minority interest in the business. Those are probably fairly common and easy to sort of understand. The other options, a gradual transition where you're selling, a piece or all of the business to insiders or family, as well as a potential ESOP, employee stock ownership plan. We see those with quite a bit of frequency in the brewery space, more than maybe some others, and we've seen probably a couple dozen in the last few years, and been some big ones in terms of New Belgium and Full Sail and a handful of others. So usually you see that in some of the larger breweries that are growing, that are profitable, and that can effectively pay for what needs to be done. And then the last few are sort of similar and probably apply to a handful of you that mentioned you're trying to stay private. It's really just trying to grow and expand and hopefully become a little bit more profitable and just try to stay private. And status quo, a lot of times we see this as, I don't have time, or I don't know what to do, I'll figure it out later, and you put that decision off later. It's not necessarily a failure scenario. It's something that it maybe makes sense, but depending on whether you have a growth plan, the forecast, the transition plan in place, may put you in a difficult position in the future if things change. For instance, if the economy changes in sort of 08, 09 to 10, hopefully you don't find yourself in a situation where you don't have a plan in place to weather the storm, and things get kind of sticky pretty quickly. So just a few tips here in terms of trying to successfully plan for growth or transition is really, again, starting as early as possible. A few years out, if it's a transition where you're trying to sell or transfer the business to either an inside or outside party, that makes a lot of sense. The earlier the better, and making sure that you're honest with yourself about the state of the business, whether there's any sort of issues or red flags, or sticking points if you're considering entering a sale or outside transition, and you involve outside parties and consultants, and there's some due diligence that starts to take place that can get kind of ugly quick and can derail those transactions. So just trying to be honest, with yourself in terms of your financials, your employees, your systems, and things like that. What's good, what's not, what needs to be improved, and we sort of recommend and advocate to our clients that try to clean things up, as soon as possible, and do some sort of readiness type planning before a potential transaction or transition. And then, leveraging the expertise of your leaders and employees, and trying to explore, all the options that I kind of mentioned previously in terms of, transitioning the business or if you're staying private and trying to grow, considering what needs to be done and how to get there. I put learn to let go. It's sort of tough to do, I think, from an entrepreneurial standpoint, particularly in a space like the beer space, the craft beer space, where there's a certain passion and artistry involved, and it's sort of hard to let go and relinquish control to some extent in terms of operating the business. But that is important, as well as not only in the business itself, but the process of going through planning for that next stage of growth or transition. And then taking your time and being flexible. I think those kind of go hand in hand, because sometimes these planning processes can take a lot of time, and they should. I think you should approach it with that mindset that it's not something that you can kind of get done immediately or within the next month. If you're doing it the right way, you're sitting down with your key leaders internally, as well as maybe some outside consultants, that put the plan in place and make sure you're thinking through everything appropriately and objectively.
The next polling question: how important is growing your company to you and or management? Very important, somewhat important, not important at all.
Okay, so it sounds like most of you realize and recognize the importance of growing the business, and sort of further to some of my earlier comments, and hopefully some of this is beneficial to you to try to recognize and sort of implement some of these plans or goals, and being able to track them as you try to grow your business and get to that next stage or next phase. So, one of the things that is important in, not only growing your business, but in particular transitioning your business, whether it be internally to employees or key leaders, or taking on outside, capital, or outright selling your business, is valuation, and the impact of some of the things we discussed in terms of putting some kind of transition plan or a business plan in place, in particular, a financial forecast or something like that, where you can kind of set some targets and goals and try to meet those objectives year to year. In the valuation world, we do look at a lot of numbers, look at a lot of financials, look at a lot of different sort of financial and forecast and valuation models, and that's really the focus as someone is kind of looking in from the outside at your numbers, is what's the value of this business, and what am I willing to pay to buy into this business. And so as we sit with our clients, there's a handful of ways to value really any business, and breweries in particular here. The output from all that planning and growth that I mentioned is in one of the outputs, I should say, and one of the key ones is really valuation and how much the brewery is worth. And when we value breweries, we look at it really from a three-pronged approach in terms of looking at an income approach, an asset approach, or a market approach. The income approach is probably something most of you are familiar with. It's really a cash flow analysis, and so you're either looking at discounting forecasted financials or cash flows to present date using a determined discount rate or cost of capital, or you're looking at capitalizing historical cash flows if the company is profitable. Another way to kind of look at it is really purely from a balance sheet perspective, in terms of what are the assets and liabilities that are on the balance sheet, in particular making sure that the assets are fair market valued. So some of the key assets in a brewery business are sort of PP&E, property, plant, and equipment. So all those different tanks and barrels and kegs and things like that, and make sure that those, are representative of fair market value as of, whatever date you're valuing the business, as well as, any debt that may be on the books, making sure that the sort of interest rate or debt rates are current. And then obviously the inventory as well, all the beer that's in those bottles and tanks and in barrels, and making sure that there's a fair market value on those based on the price points that you sell them at different channels and different markets. And then a market approach is probably the most common, or at least the most sort of most easily understood and recognizable, because that's what you kind of see and hear in the marketplace. Or if you're talking to people or reading various industry rags or newspapers. I don't know if people read newspapers anymore, but at least on the internet, you can hear about brewery ABC was bought at 10 times EBITDA. So you just look at the price, the purchase price divided by what their EBITDA is, and that's sort of your multiple there. But taking a look at actual transactions that have taken place in the beer space in particular, or looking at the publicly traded companies. There aren't that many publicly traded breweries, and most of them are quite large. But it is just another way to kind of consider valuing a business and some of the implied valuation multiples there that may be appropriate to apply to your own brewery.
Okay, the next polling question: how involved are employees with the growth and direction of your company? Very involved, somewhat involved, not involved at all.
Okay. Looks like the majority of you are at least somewhat involved in the growth and direction of the company. It makes a lot of sense. Hopefully, we like to see more employees have a say and involvement in the future of the business. But obviously, it may not be appropriate to include all employees. But the more that you can get involved, that want to be involved, that can add some value, the better. So going back to valuation a little bit, and I can elaborate a little bit more about some of my prior comments, is some of the value drivers of valuation. And it's appropriate here is sort of growth of the business. And so, when we look at valuing a brewery in particular, we look at a handful of things. I've listed some here, some of the more important ones I think from my perspective. But if you're looking at a brewery, particularly one, let's say today, what does the historical growth look like relative to some of the forecasted growth, and in particular, how does that sort of compare to comparable breweries or even the industry at large? So, as everyone's probably pretty well aware, there's been considerable amount of growth in the craft beer space over the last several years. It's been sort of 15 to 20% year over year, and the next few years are sort of consistent with that. So, if we're looking at it from the outside in at a brewery that is really only growing a few percent a year, it gives us some concern, but really kind of trying to dissect that a little bit and figure out why that may be the case. It could be there's been some challenges internally. It could be they're already sort of saturated in certain markets, or they're of a certain size. Certainly, it's harder to grow a larger sort of business in some respects than a smaller one, just based on sort of a law of large numbers and growing a larger revenue or profit base. But those types of things impact evaluation from our perspective. Now, the key one as well is obviously profitability. I think it's fairly straightforward and common sense that a business that is profitable is most likely more valuable than a business that's losing money. At the end of the day, when you're investing or buying a business, you're investing in the future and some of those cash flows, and you would ideally like to see some kind of return on your investment. And if a brewery is not making money, it's sort of hard to justify, for instance, a higher valuation or a higher price that one might be willing to pay for that business. And then this is another important one that we see, and I think we place a lot of value, sort of pun intended, is sort of brand recognition and customer loyalty. In the alcohol space in particular, it's really critical, right? Given how competitive the space is, whether it be a brewery or a winery or a distillery or something like that, there are over 4,000 breweries. There's roughly 10,000 wineries in the U.S. or North America, and they all basically sell kind of the same product, right, in their own space. It's beer in a bottle or can for the most part, or it's wine in a bottle, or I guess maybe some of you maybe drink wine out of a bag or something like that. But what your customers say about your business and how loyal, how sticky are some of those revenues, says a lot about the message that you're portraying to the public, and what the brand sort of may be valued or what that recognition is. So, given the increased competition in the beer space, it is one thing we kind of consider is this a business that is scalable? Is this a business that people know and like and love and are passionate about and go tell their friends that you got to have this beer, you got to go down this tap room or whatnot. And so that it's more qualitative in some respects, but when you're looking at it from a valuation perspective, we try to sort of marry the quantitative and qualitative aspects to try to come up with what we think is the right value of a business, and whether it's if we're looking at it from a consultant standpoint, or if you're looking at it from a potential transition or investment standpoint as well. And then sort of further into the weeds a bit is how a brewery is distributed. As some of you and a lot of you probably are well aware, given the sort of proliferation in SKUs in the beer space, there's sort of increasingly more challenges to getting distributor attention and shelf space. And I'm sure you've gone into Whole Foods or some kind of large wine, spirit, beer retail type shop, and you've seen the amount of craft beers available grow considerably, and it can be a bit challenging from a consumer to understand that, and it's tough to get distributor attention at times now. So when we consider how a brewery is distributed, whether it's national or regional or just local, or if they're self-distributing, we try to consider that and some of the margins that sort of come into play there, as well as some of the relationships that they may have in place, particularly as they relate to the potential growth prospects of the business. It's sort of a bit tougher, I think, now if you were starting a brewery or if you're self-distributed and don't have any relationships in place to try to grow that business without key contacts and relationships at distributors, given the amount of like as I mentioned, sort of brands and beers that they have in their portfolio. And other sort of value drivers, this is true of really any business, is the management team and key employees. If you ask an investment professional, whether it's a VC or private equity professional, what they invest in, a lot of times the number one sort of key factor is they invest in people, they invest in management team. And the same is true in the beer space, right? You're investing in, obviously you want to invest in the product and the quality there, as well as sort of the brand, but you're investing in a team, and do you have the right team in place? Is the owner the right guy or girl to grow the business to the next level? Are they the face of the business? Are they passionate about what they do and want to meet as many people and share stories about how great their beer is? And same goes for some of the key employees, whether it's sales or the brewmaster and things like that. And depending on the answers to that, there could be some risk there. A lot of this sort of translates to growth or risk, ultimately value from our perspective. But we look at it from a risk perspective of whether there's a change or transition that may need to take place on the management team or an employee level. And then thinking about it from a valuation perspective, looking at liquidity or capitalization of the business, how much equity or debt may be on the books, how much cash they have on hand, do they have the right amount of capital or access to capital to grow their business. We've seen this a lot lately in the last year or two. Lots of breweries getting out over their skis in terms of trying to expand quicker than they should and quicker than they know how. It's an exciting time in the industry. I'd say it's the best time in the history of mankind for the beer space. But there's a lot of challenges ahead too, and there's a lot of warning signs in terms of things that we hear anecdotally in the market through our conversations with investors, consultants, and even our own clients in the beer space is people trying to take on outside capital, whether it's in the form of equity or debt, to fund expansion of their operations, and then get into a situation where it's got this great giant facility that can produce 50,000 barrels or 100,000 barrels, but they've been running a 5,000 barrel facility for years, and it's a really different business. And a lot of times the owners and management team in place is not really equipped or I think understanding of what's required to build a business and grow a business, in particular operate a business of that size and scale. It's quite a different operation. It requires a really thought out plan, financials, the team, and all that stuff. So those are sort of the things that we kind of consider on the valuation side. A lot of it is pretty straightforward in terms of looking at numbers and if business is growing or if it's profitable, but also some of the qualitative stuff. Do you like the beer? So we try to we do market research, we like to say, in terms of when we work with clients, we try their beer, and we always say we like their beer, but there's certainly some beers that are better than others that people latch onto and love, and those are the stories that you hear about, and they're able to attract outside capital, or if they're trying to grow their business, it's easier to grow because there's a strong sort of customer loyalty, brand recognition, stickiness in terms of some of their revenues and distributor relationships and things like that. So that all adds up to sort of a higher valuation, whether it's again you're staying in house in terms of whether you want to grow the business now and maybe sell at some point in the future, or if you are looking to sell or transition your business in the near term. And so as I kind of wrap up here, sort of thrown a lot at you in terms of trying to grow a business and what you may want or need to consider if you're trying to transition your business or sell your business, and sort of how valuation is involved there, throughout and at the end. Again, I'll stress it for the third or fourth time. The earlier and more you plan, the better. I've never met a client that said we prepared too much, we planned too much, we did it too early or too soon. If anything, it helps put good business practices in place, and you get a good feel of your business and how to execute and operate your business. And things change, life changes. So especially if it's a privately held business and you get the right opportunity, right? Whether it's an owner or founder that wants to move on and pass the torch or transition, or if you get an outside party that throws sort of an unsolicited offer at you to sell the business. If you've been planning for that potential opportunity and outcome, you're in a better position to sort of capitalize on that and realize the value that you should in your business. And then trying to take a dual path approach in terms of growing your business or transitioning your business. I mean, again, if you're not growing, you're dying to some extent. Especially in the beer space. And if your sales are flat, right now. I think you're in trouble because there's just too many. There's too many competitors, and it's too competitive at this point. So, you got to be thinking towards the future to some extent, and how to get there. And then again, having the right team involved, both internally and externally. I understand that there's costs associated with some of that in terms of hiring the right consultants, but making sure you have understanding of what the value of your business is, hiring someone that that does valuation work, making sure that you have the right banking relationships in place in terms of having access to capital if you need it, and if you're trying to grow, have the right legal team in place. You don't want to end up in a situation where your entity was structured incorrectly, or you're getting sued or litigated against. You want to make sure that again you have the right team involved, and the right management team as well in terms of key employees. And again, understanding what the key drivers are in valuation. I certainly didn't hit all of them. I just kind of hit the highlights of some I think are important from my perspective. And then in terms of not losing sight of what's important. I mean, from my perspective, you're supposed to love what you do and have fun. So, I think making sure you do that. There's a lot of work involved in the beer space in particular. Is not necessarily a thankless profession because it is a lot of fun, but it's a lot of hard work behind the scenes in terms of trying to make the beer and sell it and track it and grow a business. And so trying to make sure you focus on and keep in mind that all these things are done for a reason, but you're also supposed to try to enjoy and have a good time at the same time.
Okay, the next polling question: do you have a good understanding of how breweries are valued? Yes or no?
Okay. Looks like it's sort of split half and half roughly in terms of, I think, those of you that at least have a sense for how breweries are valued and those that don't. I mean, it's sort of tough to cover in some detail during a presentation like this. So I intentionally hit the highlights in terms of the three approaches that we typically use, and then there's some variances, throughout those approaches. But as I'll mention, I'm available. I'll provide my contact information here in a little bit, but if anyone has any follow-up questions or concerns or issues or anything that I can help with or elaborate on them, I'm more than happy to talk or meet with you.
We would now like to give our attendees a chance to ask some questions. To ask a question, please submit a question via the chat box on the bottom left corner of your screen. If we don't get to your question during the webinar, our presenter will follow up with you via email.
Okay, so someone wrote in or asked, how often do breweries we work with have a formal plan in place? I think I might have touched upon this, but most of the time, it depends on what plan you refer to. So there's sort of a business plan and a sort of a forecast type plan. I think that's what was meant. So in terms of a business plan, that's sort of a full-scale, business school case study type plan that digs into, the market, the industry, the competitors, the products, the business, how you're planning to sell your products and make money. Typically, I only see those when a company is looking to take on capital at some point. They're looking to get outside capital to sort of growth capital, you'll see some sort of offering memorandum that goes around or some kind of investment deck that basically hits some of those things I mentioned relative to a business plan, or obviously selling the business. I don't see that so much day to day as a company operates and tries to execute. Forecast plan, I see that quite a bit. Sometimes it's only 1 or 2 years out. We typically like to see 3 to 5 years out, something like that. It's difficult, inherently difficult to forecast a business that's changing and growing so much, but it does give us sort of guidance and comfort as we look at it to try to help our clients understand their business and meet certain objectives, as well as identify and handle certain pain points that may be on the horizon. Another question, I guess, that came in is what's the best transition plan for a brewery? And that really depends. Each brewery is different. Each business is different. But for breweries, it just kind of depends on what your objective is, what your sort of current status or stage of development is. Again, going back to one of the first slides is, are you growing? Are you regressing in terms of sales? Are you profitable? Are you not? How well capitalized are you? All those types of questions. And depending on that and what your objectives are, your goal, if you're looking to exit the business immediately, that's a different answer than at some point I want to consider selling my business, or 3 to 5 years from now I want to sell my business. And so you can put things in place to kind of get to those goals. But I really don't have a great answer for you there. I mean, I think as I mentioned, we see a lot of ESOPs in the beer space. I think a lot of that is because it is hard work, and the breweries often function as teams, as families, and the owners and sort of founders like to, I see that more than I do in other industries, like to reward that work and providing employees the opportunity to be owners in the business and share in the upside and the opportunity there. But I also see a fair amount of sort of status quo, stay and grow type things as well. And then I'm sure people are well aware that that we've seen an increase in transactions as well in the beer space in terms of either selling a minority interest. We don't see those as much. We usually see someone invest and gain control. If they're going to write a large check for millions, sometimes tens or hundreds of millions, they want to say in how the business is run and what the future holds and how to get there. You'll see them take ownership control or even outright control in terms of buying the entire business. And at that point, obviously, you're out of the business, so you're onto something else. All right, so I think that more or less wraps everything up. If you guys, anyone out there have any other questions, feel free to contact me. Here's my contact information. You send me an email. Much to the chagrin of my wife, I always have my phone on me and am always available, for better or worse. But you feel free to give me a call as well. The number listed there is my direct line. So if I'm not in my office, feel free to. If you have any questions or anything I can help with or sort of expand or elaborate on that I mentioned today, I'm happy to do it. And I thank you for everyone's time.
Thank you, Derek. That's all the time we have for questions. Please check your inbox for a follow-up email with an evaluation form that must be submitted in order to receive your CPE certificate for the course. Thank you all again for attending, and have a great day.